Welcome everyone to the Daniel Krug and Associates February 2026 market update. And really this is going to be more about AI adoption and Daniel Krug and Associates as a firm. So today's presenter is myself, Daniel M. Krug, CEO and Senior Wealth Manager at Daniel Krug and Associates. Our firm is located in Clarkston, Michigan, and we are a boutique firm servicing high net worth clients that are looking for more of a holistic and service-oriented firm to take care of their family and their family's needs. We do multi-generational planning, and that's probably one of the biggest things that set us apart from other firms. So today, we're going to talk a little bit about the economic speedometers for March 2026, and to give you a little bit of a background on these, RBC Rockdale is the one who puts these speedometers out. We rely on some awesome research that they do for our clients. And if you're looking at these speedometers, it kind of works like this. Green is good, yellow is neutral, and red is negative. And when you're looking at the dials will have either just one black hand on it or a black and a gray hand. And what that indicates is the black is where we are today, the gray is where we're coming from. So looking at this in January was actually looking pretty healthy. This is a normal, steady Eddie mid-economic cycle chart. It's pretty solid, a little bit of red, most of that is in valuation, but everything else is looking pretty solid. If you fast forward to March 2026, here's what you have in changes. First of all, the economic outlook has improved, and that's really a function of all the reports that have been coming out that generally are saying that the economy is improving, whether it's a labor report or it's inflation or it's the GDP. Most of them are either leveled out a bit or they're moving forward, which is a very good sign for the economy. Secondly, when you're looking at this chart, you see that there is one that went a little bit yellow, and that is your fiscal policy. As you could probably understand there, fiscal policy, when you're looking at it, we've got two big events going on right now. One, we've got a changing of the guard relative to Chairman Powell in the Fed. So that's kind of disrupting things a little bit. And then on top of that, we've had a couple shutdowns of the government this year, or partial shutdowns. And this last one is kind of testing some resolve between the two parties. Eventually, they're going to get things together and start working again, but who knows how long that's going to take. We pray that it's going to be shorter than longer so we can keep moving forward. But when you're looking at this, the only thing in this chart that's running negative is the market valuation. What you're seeing here is that it's running kind of red. What does that mean? It means that the overall PE ratio of the markets is high, higher than most people would like to see. In other words, what they're saying is that the value of the stocks out there are actually exceeding the earnings ratios that are part of the PE, or price earnings ratio, that the economists look at. With it being high, the question is, are we going to be running into some kind of major market correction, or is it going to be something a little more subtle? Well, we believe, based on the economic indicators, that it is going to be something a little bit more subtle that helps correct the valuation. And if you looked at the stock market over the last 3 months, you can see that the market's kind of walking sideways. What does that mean? Well, if the market is walking sideways after a run-up in the stock market, it's really kind of getting its base right now again. And what that does is it allows the earnings and the price to kind of catch up to each other. And that's really what we want to see with the markets and the valuation. The other thing that can happen is we might have a healthy correction, something very similar to what happened in the beginning of 2025, where the market only came down about 19%, and then turns itself back into a bull market at that point. Something we would consider a healthy correction. But right now, what it looks like is we're just kind of walking sideways, and that could last for 2 months, 3 months, 6 months. So we'll just keep an eye on that and see how things are working. Now, let's go on to the meat of what we're going to be talking about today, and that is AI, elevating client services with AI. And what does that mean? Well, I'll tell you something. I've been researching AI really over the last 6 to 9 months and really took a deep, deep dive over the last quarter, because what we're looking at here is a lot of new information coming out and a lot of innovative work going on. If you've ever looked into AI, you could go down to 2 different paths, it seems. And I did. When I first started looking at this, I looked at it from a standpoint of where is AI going and what's the potential, but also what is the problems that could be coming out of having AI without control. Well, if you've gone through any crisis, you know that it tends to be something in the middle. And as I went through the 2 sides, then I started thinking, you know what? How is this actually going to affect businesses out there today? And we all know that the businesses employ people. The businesses are kind of one of the backbones to the GDP and the growth of the economy. So that's probably an important place to look. And then I actually got a little bit deeper into it and started focusing strictly on financials. Okay, well, most financial companies are kind of slow to change. And there's reasons for that. There's a lot of regulations, and a lot of companies are very kind of skittish about it because they have so many advisors, and they really kind of set things up with a control standpoint for the weakest link. Well, at Daniel Krug and Associates, we really don't have that factor that we have to work with. We understand what we're supposed to do from a regulation standpoint. So we started taking a deep dive into this to see what the financial industry is doing from an AI standpoint. And there was a lot of exciting things going on out there. You might know that Rocky and I went down to Marco Island. We had to go to a conference down there. One of the main reasons for going down there was to find out what AssetMark is doing relative to artificial intelligence within their organization. And then on top of that, looking into and discussing with other advisors what they're doing from an AI standpoint. Trying to glean as much information as I could and get any kind of experience from the other advisors based on what they've had, they're working on, and what kind of experiences they've had with it. There's been a lot of good information that came out of that, and it kind of helped with putting together what we're going to do for the future with Daniel Krug and Associates and AI. So that being said, with the groundwork, let me kind of move forward here. So first, the overview. Why AI and why now? Well, the reality is AI is here and it's here to stay. The fact is that it is, from a technology standpoint, it is growing and compounding on itself faster than anything else that's happened in history. And because of that, if you do not get in front of this, you're going to be ran over by this in the industry. So we want to take the stance of getting in front of it and making sure that everything that AI has to offer will actually enhance the service for our clients. So based on the overview of what we're looking at, we believe that AI is going to give us much faster response times for clients, more personalized communication, proactive portfolio insights, which is important. We are an investment firm, enhanced reporting and transparency for each one of our clients, and then most importantly, more time for personal client connection. That is the key. That is the driving force for what we want to accomplish with AI within the firm. Now, how AI enhances your experience? Well, first of all, let's talk about efficiently reducing time on repetitive tasks that the staff is working on. Give you an example here. First of all, if the employees or the staff members are working at 100% capacity, the question is, do they have time to make that extra, just personal phone call to our clients? And the answer is it's going to be more difficult because they're already at capacity. But if we can reduce their capacity by 20, 40%, what does that do for our clients? Well, it allows more engagement with our clients, more understanding what's important to you so we can better know you and better serve you. So that's the first part of this whole AI thing. If we can get repetitive tasks taken over by AI and utilize that to get the things done that we can do by our hands, but it takes 4 times as long, then that's going to make it better for our clients. Second one, risk and opportunity alerts. The reality is, if we have the ability to go into our software programs, our databases, pull out enough information and the right information to look for opportunities for our clients or risks that a client might have, and then act on those, that again is going to help our clients. Quick example on the risk side. If I've got a client that's been with us for 20 years, and let's say we're looking at their estate plan that was done 20 years ago, what kind of information are we looking for? Well, we're looking to make sure everything is dated properly, updated if necessary, and we've got the right beneficiaries on accounts for clients, and we know who's in charge when it comes to the estate plan. That information is very vital. So let's assume we scour our information, we come back and we find that, well, this client hasn't had an update on their estate plan for 10 years. That's important. So we can actually reach out, find out why, and actually improve that situation for our clients. In other words, trying to eliminate the risk for our clients. So that's an important task, and it can be done much more efficiently as far as drawing that information out with AI than it can by a manual person going in and looking at every single piece of document to try to figure out if there is a need there or not. The next one is streamlined service request. One of the things that we really pride ourselves on is having that personal touch with our clients and going the extra mile from a service standpoint. It's interesting in this industry because I have found in talking to a multitude of advisors that when they look at the amount of work that we do for our clients, the amount of service we give you, they're kind of like, dude, we don't do anything like that. And most of the reason is because it just takes a lot more work. It costs more money to effectively serve a client in a deeper relationship. But we're certainly willing to do that, but we want to enhance that. We want to take those streamlined events, whether it be a strategy implementation or a client onboarding, or if it's an estate settlement. We want to be able to streamline that and actually reduce that timeline down to something that's more manageable for clients. Next, data-driven planning insights. This is really important because we want to be able to really look at where a client is, evaluate everything that's going on in their lives, and then be able to bring relevant information to the client for decision-making purposes. And AI will allow us to do that more. So I want to really make sure that there's a clear message that comes out of this webinar that we've got right here. And that clear message is all AI is supposed to do is support our staff. It is not designed to replace anybody because we believe that customer service has to be first, and customer service starts with an individual talking to our clients, not AI. So this is really important, and it's a benchmark of where we're going in the future with AI. Now, let's talk a little bit about timelines. In the timelines, we've got a process that we're going through here. So The implementation process really kind of works like this. It first starts with due diligence, and this is something that we've been doing over the last 3 to 6 months. The last 3 months really kind of taking a deep dive into the different type products out there. Second, once we've looked at the products that are available that actually meet our criteria from a security and efficiency standpoint, then we have to determine which programs will actually help us achieve our goals. Now, we're very close to having that list right now of programs. Matter of fact, we've got a meeting coming up here next week where the whole staff is going to come together and we're going to be reviewing it. The third one really comes down to the design and implementation of the plan. This is very important because if you do not have a plan to put this together, things can get hairy real quick in a business. So what we're looking at is doing this in steps. We want to implement one piece of the puzzle, make sure we've got that in place, then go on to the next piece of the puzzle, and so on, until we get to the fourth stage, which is really executing and evaluating each AI program along the way. And then ultimately, once we do have everything in place, number 5 comes in place here. Monitor and improve the systems all along, because with AI, things are always changing. And if there is a program out there that can help enhance the service to you, our client, we're going to implement that. So that's kind of the 5-step process. This will go on throughout 2026 as we implement the first and ultimately the last in the list of programs that we're going to be putting in place to better serve our clients. Now, what does it mean for you? Ultimately, faster answers, clearer reporting, more proactive outreach, higher level of service, and at the end, stronger long-term relationships between everyone in our firm and our clients, you. The people that we care about the most. Now, the future of our client services, again, just to recap, it's technology, use the AI to enhance what we can do, bring a more broadened experience for the client, and then deepen the personal relations for you as well. That's it for us and where we're going with this. We will constantly update you on where we stand, what we're implementing, and how we're doing things in the future. But if you'd like to kind of go over this webinar again or look at any of the webinars we've had in the past, just go to mydkna.com, click on Visit with Us. You'll get a drop down that has DKNA YouTube. Click on that and it'll bring you directly to the YouTube site. It really is a wealth of information there. Now that brings us to the end. So keep in mind, there is no need to worry. We're ready for 2026 and beyond.